We are officially in a recession and the stock market is blasting higher. Apple and Amazon just reported earnings. Both of these stocks are breaking out and the stock market just had an amazing day today and it's climbing higher in after hours. And all of this is coming as we officially entered into a recession. Now, technically, a recession is defined as 2 consecutive quarters in declining GDP, which we had. The GDP data came out today and it fell by 0.9%, which is pretty bad. The previous GDP reading was a decline of 1.6%, but I will say this, because everyone's probably wondering, and I've already had this question asked a bunch of times today, how is the stock market rising when we officially entered into a recession? We're going to talk about that and many other things in this video. Stick with us. But Tom, I think the first main thing to point out is that how many people will say that technically, or many people will say that we're not in a recession. Do you have any comments on that?
Yeah, so it's pretty interesting. A lot of people are conflicted right now. And whenever you see a bunch of analysts talking about things, especially people in government, they're saying that we're not in a recession. I know that even like Joe Biden came out and said this. Yellen now came out and said that we're not in it either. And whenever you look at jobs numbers and stuff like that, it actually is pretty telling here. So you can see that our jobs numbers are actually pretty good here. So this is the unemployment rate, and you can see it's actually fairly low right now compared to history. And we're coming off of highs, obviously, with COVID. So it's pretty cool to see that unemployment rate staying low here in the shorter term. And one thing I want to point out is look at previous recessions. Go back to 2008 and 2020. You can see how every time that this happened, we can see that the unemployment rate actually shot up to highs. So that's pretty big to see that it is staying low right now. But obviously, we're still seeing some pretty bad stuff throughout the economy. So we still have high inflation. Consumers obviously are getting hit a little bit. There's higher costs with gas and everything like that. Obviously, though, it seems like they're getting by pretty well. So overall, this is obviously a bad situation, but it's not as bad as it could be, in my opinion, Mike. And it's really good to see some of these people like Yellen coming out and kind of explaining it a little bit better here.
So here's the main thing to know. Technically, we're in a recession, but it's important to understand that every recession is unique. In many past recessions, we see unemployment get out of control, and it's just like a bad time for, the economy overall. In the current market and economy, we are seeing a bunch of mixed signals. So it's like we're kind of in a recession, we're kind of not, but it's important to understand that it is more than possible for us to be in a recession and asset prices continue to increase, whether we're talking about stocks, real estate, and other things, because every recession is unique, and this recession is just, it's not something that we've seen lately. A lot of people, when they hear recession, they instantly think back to 2008 and 2009, where it was just a complete disaster, but we're just in a different scenario now. So that's important to keep in mind. You're going to hear many people saying that we're not in a recession, like especially people in government. Technically, we are, though. So take that however you want. And the stock market doesn't really care. It's blasting, Tom.
Yeah, that's the good news. So, hey, I'll take it. The stock market did very well. You can see in pre-market, it was kind of rising up. It did end up falling off at market open, Mike, and we ended up double topping there around 402.75 to 403. And I did get worried there for a little while that maybe we were having a fake out in pre-market, but I was really happy to see stocks blast back up throughout the middle of the day. And yeah, like you said, in after hours, really climbing up here with some of these good earnings reports with Apple and Amazon. So really cool to see the market up after this. I know a lot of people were worried about it. And Mike, I know that we talked about this a lot, but whenever the majority kind of feels like the market's going to go down, sometimes the market likes to go against them, I feel like. And, this seems like one of those cases where I feel like a lot of people had a lot of fear, and then the market obviously reversed on us.
Yep. All right. So let's talk about the 2 giant earnings from today. Apple and Amazon. Both of these stocks are rocketing up, and we'll talk about Apple first. Like I said, it's booming right now. They actually had some pretty dang good earnings. So they beat on their profit and their revenue, as we could see on CNBC. Tom, I mean, this is not something you would normally see, in a recession or bad economic environment, So I know this earnings season was kind of mixed, where we had some companies report some pretty scary data and numbers, like Walmart and Snapchat as two examples, but other companies are doing a lot better than the market expected. So it's always nice to see one of the most powerful companies in the world, Apple, beat on earnings and rise up.
Yeah, definitely. And it looks like they beat on just about everything here. It looks like the only thing I'm seeing that they didn't really beat on was like other products revenue. Their services revenue was slightly down, but other than that, their iPhone revenue was up by over $2 billion. Their revenue came in up right there too at 83 billion versus 82.81 expected. The EPS beat by 4 cents. So overall, pretty good. Their gross margins beat pretty much across the board. Like I said, Apple did pretty good. And like we said here, in terms of an outlook in the aggregate, they expect revenue to accelerate in the September quarter despite some pockets of softness. So that's actually a really big thing because their outlook now is actually looking pretty good. And this is a really key thing right now, in my opinion. Obviously, outlooks are pretty good here. It says they did not give formal guidance, though, so we're going to still have to see how that comes out maybe later, obviously in the quarter. But nonetheless, Mike, it's pretty good. It's pretty good to see this. And like we said, both Apple and Amazon stock are flying up here today and after hours, and it's looking pretty promising heading into tomorrow and next week even.
There we go. Now it's Amazon's turn, Tom. This stock is also booming in after hours. Their earnings weren't as good as Apple, I would argue. They beat on their revenue, but they did not beat on their earnings or profit, you can say. Tom, fill us in.
Yeah, so like you said, Mike, they did beat on revenue, but there was some stuff that was a little bit lackluster, like you said, with the profit numbers and stuff like that. The good thing I saw with Amazon was pretty much their third quarter revenue. They expected to be between 125 billion and 130 billion, and analysts were expecting sales of 126.4 billion. So to see them have that range there higher than 126.4 is really good. And like I said, right now, outlooks I feel like are very important with a lot of these companies, but their revenue did beat, Mike. There was some negative aspects to it, but nonetheless, their stock's ripping up just like Apple is here in after hours. Honestly, Amazon looks almost a little bit better than Apple, Mike. It's kind of went straight up, really blasted up through a lot of resistances. And I'm really glad to see this, especially following that really successful Prime Day recently. I know a lot of people have been talking about consumer spending and stuff like that slowing down, but look at these companies. You know, they're still reporting good numbers, especially Apple with those iPhone numbers. I mean, that was really surprising too.
Exactly. So I bet everyone's asking themselves the same question when it comes to these two stocks. Is now a good time to buy? And while no one can time the market perfectly, if you know that you want to own Apple and or Amazon stock for the long term, you just have to dollar cost average. The market and the economy is crazy right now. At the end of the day, both of these stocks are relatively low, and slowly buying in over time has been a good strategy. So, if you're asking yourself, hey, is now a good time to buy or not? Realistically, the best option or the best route to take would just be to, slowly buy in over time. So maybe enter a quarter of your position now and then a quarter of your position in a couple weeks or a couple months or something like that, and just get a nice average of the stock's movement.
Yeah, exactly. And that's going to be the big thing, just to get like a nice average in there. And right now, like you mentioned, they're around lows. Like, look at this nice support forming on Amazon. It's really far off of its highs right now compared to other points in the past too. Like if I go to a 1 month chart here, just look at the recent dip. That's actually pretty telling. So yeah, you're getting it at a really good discount. It might keep going down a little bit over the next few months. Obviously if these inflation numbers and stuff don't start coming down, although I feel like they will, obviously, with all these rate hikes going on, but nonetheless, the market could keep going down. So just average in. You never want to overexpose yourself either. So make sure you diversify a little bit. Even Apple, Mike, it's up a little bit higher than Amazon is from the lows, but nonetheless, it's still at a really good buying point compared to those highs. Plus, we got to keep in mind Apple is probably the strongest stock on the market.
Yep. All right, Tom. One other thing I want to talk about really quickly are these solar stocks. A bunch of solar stocks just exploded today. So why is this?
Yeah, this was insane. Like, look at Run today. It was up 29%, almost 30% there at market close. And this is actually really good news. They are passing a bill through Congress right now that is going to give $369 billion in funding to clean energy companies and through different things like incentives and stuff like that. But pretty much in the Inflationary Reduction Act of 2022, this is where this funding is going to come from. And there was a deal reached between Chuck Schumer and Joe Manchin. So it's going to be a pretty big deal. Like we said, this is only the funding for clean energy, $369 billion. I'm sure that the whole entire act is going to end up being a lot larger than that. And they're actually going to be voting on this sometime next week, probably. So keep your eyes on that. If we do see it pass through the Senate, then that'll be pretty good news. And we might end up seeing this come into effect fairly soon. So hopefully this helps out these stocks, Mike. But either way, they're really running up. Like I said, Run itself is up 30%. We had Enphase up, Plug was up 25%. It was just a great day for clean energy in general.
All right, I'll take it. So, Tom, now it is time for some of the other earnings and then the schedule for tomorrow.
Yeah, so with the other earnings here at the end of the week, guys, it looks like pretty much just oil tomorrow. There is some outliers. We have AbbVie, which is a pretty big healthcare stock. Colgate and PG are also going to be reporting for all of our dividend players out there. I know those stocks are pretty good as far as like safety and stuff like that. So be on the lookout for those. But the big ones will probably be oil. Exxon reports along with Chevron and Phillips 66. So that's going to be pretty big for tomorrow. Looking at some of those oil plays, Mike, Exxon was actually doing pretty well today with the rest of the market. So I'm curious to see if they're going to report positive numbers or not, given all the high prices lately.
Right, yeah, there we go. And then what's big for economic data tomorrow?
Yeah, so just like we talked about a lot with Apple and Amazon, there's actually some pretty big stuff regarding personal spending and stuff like that tomorrow. I know Amazon obviously relies quite a bit on personal spending. So to see these numbers tomorrow is going to be pretty crucial. You can see it's marked in red here on Trading Economics, which means that they're ranking it fairly high. So definitely keep your eyes on this. It's not going to be anything groundbreaking like the GDP data was today, but it will give us an insight kind of in how consumers are doing with their money right now. So hopefully we see these numbers come in at a higher pace. And I'm kind of curious, Mike, because Apple and Amazon reported such good numbers here that I might almost expect these numbers to do decently well.
Yeah, we will see. So, Tom, let's get right into the momentum plays for tomorrow. With the first one, we have Roblox to the upside.
Roblox, yeah, they had a big pop today. Go ahead and make them break above $43.60. If they break that in pre-market, then look at $43.75.
Boom. With the next one, we have SWBI also to the upside.
Smith & Wesson, it's cool to see them finally rising up off that $13 support. Go ahead and make them break above $14.50.
And with the last one, we have LOGI also to the upside.
Yeah, Logitech. There's a bit of a triple top going on here around 55.50, but I do see a wick extending up, so make them break 55.65.
All right, so we're watching Logitech, SWBI, and RBLX for potential day trades to the upside tomorrow, only if they break above the levels Tom listed. But I also want to give a giant shout out to our member of the day, Billy the Kid, in the Stocked Up Discord. We saw you've been pretty active, especially over the past month, so we definitely wanted to give you credit for that. So huge shout out to Billy the Kid in the Stocked Up Discord. If you guys want to join the Stocked Up Discord, check out that first link in the description and the comments down below. It's completely free, and we have a bunch of amazing people in there. With that being said, Tom, do you have any favorite setups or anything you're watching heading into tomorrow?
Yeah, look at the SPY right now, Mike. This almost looks like a penny stock on some of these shorter term charts with all this volatility over the past couple of days. I'm really glad the volatility went to the upside for once. Lately everything's been pushing the market down. So hopefully we can continue up tomorrow morning and maybe end the week strong heading into next week. Looking at the SPY here, we pushed above $400 in a big way. I actually put this purple line here, Mike, on the charts yesterday, and it was pretty big to see it kind of like blasting up above that. So really cool to see the SPY breaking out. Looking at it on the daily chart though, we are going to be getting up into some pretty big resistances, and it does seem a little bit overextended in the shorter term. So you have to be a little bit careful, but obviously we're having some great earnings reports tonight. I know Apple and Amazon are really killing it. So like I said, hopefully we can continue up and then maybe end the week strong here. And obviously maybe continue this in the next week, because it's been a long time since we went on a big uptrend like this. Even looking at like Apple's daily chart, you can finally see that this uptrend here has been pretty solid.
There we go. Guys, if you like our videos, make sure to subscribe. We post new ones every single day, but overall, it's awesome to see stocks popping back up, even with a relatively bad economic data report with the GDP. So either way, if you're new here, make sure to subscribe, and let's have an amazing end to the week.